Hello, folks. Brandon Chapman with you today. It's another video for April 24th, 2023. And the S&P is modestly higher at the moment. Looks like it may finish close to unched on the session as we deliberate near highs. And of course, oil and gold leading today as the focus is turning to communications. Their earnings season about to kick off following a pretty promising start with financials last week. We'll go through some of the data. We'll look at some of the option activity today as well. To help give us a sense of direction and opportunity for the broader market in specific areas of the market showing strength. All right, so we look at the S&P, and again, we pulled back towards the end of last week. We held on Friday. We're holding today. We're basically searching out what is the next leg for the market going to be. Is it going to be a test of 4,200, or is this the point where we start to break down? And this is where, you look at volatility measures or gauges. And this is telling a story that is not exactly all that bullish. If we look at the VIX right now is coming off lows around 16. You'd have to go back a ways before we've seen lows like this. Early 2022, we're at a similar area, late 2021. Again, the volatility in the market, if you follow the S&P, has been narrowing. And as we look at the kind of the weekly candles here, go back to the daily, what you'll see is that the trend of really wide rangy days really began to get compressed as we hit the beginning of April, around the 4th, 5th of April. And at that point, you really knew the VIX the bottom was about to fall out of it. Us in my sessions talking about during the week, the idea of the VIX pushing towards 16. And this is the hard thing with the VIX. Where does it bottom? When the VIX bottoms and VIX starts to rise, the market generally sells off. And what was a signal that was saying the market was likely going to see the trading range start to diminish? Well, first off, we'll look at SKU. SKU is an end of day data point. We're currently, as of last Friday, about 133. But if you notice since April here, the trend has been higher in SKU. When you start to approach 130 or beyond, what does that tell you? It says you're going to have a higher frequency of small updates. And I realize I'm not talking about the downside here, which SKU says there's the crash risk is elevated, but as part and parcel with the crash risk, the downside falling out the window, you have the steps up the stairs, right? So a higher frequency of small updates. So you kind of expect the market to grind higher as the SKU starts to hit more elevated levels, as institutions are hedging their downside risk, worried about the tail coming around and seeing a big, more or large downside moves. And so right now we're kind of at the point where the VIX is low, SKU is high. And the way I like to look at the VIX is more from the term structure. I want to see, how does the 3-month VIX relate to the 1-month VIX? How much of a premium is the 3-month VIX to the 1-month VIX? And right now you'll see even today we're at 1.2, meaning what? The 3-month VIX is 20% higher than the spot VIX. We got that, for example, first week of December. We got that in August. We got that back. We can look back a little further. But generally speaking, when this happens, it's an indication the market's about to maybe pull back 5 to 10% in the coming several weeks. 3 weeks is usually the time frame I put on it. And so this is a pretty timely indicator, and it's occurring at a point where the SKU is high, signaling the tail risk being more pronounced in the market as institutions are hedging on a more pronounced basis, creating the higher SKU, driving a back-month volatility, expecting higher volatility in the future. And so as we look at the S&P right now, we're seeing where it's positioned after a pretty nice run near a pretty significant area of resistance at around 4,200. The downside is here. Now, that doesn't mean we can't rally to 4,200 or higher, right? And so can those things reverse and not materialize into a major sell-off? Yes, it can. It's just the probabilities are pretty high that we're looking for some downside move. And if we look at even just like a 10% decline off of the highs near 4,200, 3,800 is certainly in view to the downside. But again, 5 to 10% is usually what I expect when you see those indications. One of my sessions, I walked through how to hedge the S&P. We have something called the atomic hedge. This is a variation of it, basically selling call spreads in order to buy a put, therefore reducing the downside risk. And mitigating some of the downside risk here. If we do see a decline, you do give up some stuff to the upside. And so again, it's just trying to say, what is the trade-off here? How much upside do we have relative to the risk? And I think the skew is saying what? We have limited amount of upside. Yes, those small, higher frequency updates could carry us higher, but the downside is more in view. 380 on the SPY, maybe even down as low as 350. And there was a significant print last week. I forgot to put it on my chart, but it was about over 1 million shares traded at around 214. And so again, we have a pretty significant level established based on that single print, like we've seen at other points that have generally led to inflection points for the market. So we're just waiting to see the downside. Now, quick recap on earnings. This is as of last week, a little bit dated, but we're just barely going to start to kick off a lot of communication stocks. For example, Google is set to announce, I believe, tomorrow after the close. We have Verizon, who's announcing before the market opens tomorrow. We've got AT&T already announced. That was a big drop last week, which contributed to some of the weakness in Verizon. Meta, you have a handful of companies that's contributed like 90% of the performance in the S&P this year came down to Apple, Microsoft, Meta, NVIDIA, and I forget the other one. But anyway, but you can see that Microsoft today, again, what are we going to sell that's going to take the market lower? Expect to see some weakness in these specific names, but Meta does have an earnings report coming up this week on April 26th after the market close. So Wednesday after the market close. We've had a phenomenal run, and I think the downside is probably, getting kind of built in here because we've run so heavily. Even coming out in line with expectations or a slight miss could mean significant downside potential. And what we saw today in the market, and I have scans that I do that help identify these opportunities. And this is one that all ETFs. I kind of walked through today. ETFs. We're looking at some specific stocks. You can also steer this towards sectors like communications, for example, down here, and you can run these scans and again, it identifies potential opportunities. Right? You'll see Google's in here as well, but Meta is in here. Netflix. So Verizon. A lot of these communication companies are seeing significant activity today. Well, if we take, again, given the bias towards communication because of the earnings cycle, what about XLC? This is a communications ETF. It's coming off very, very elevated levels. We had kind of our initial breakdown here, and we're approaching earnings season. One way to tackle it is maybe not trade an individual stock. You might go with the specific sector fund or industry fund that's tracking it. For XLC today, it was the 5 May expiration here. You'll see 5,000 and 10,000, basically buying 5,000 puts, selling 10,000, a ratio spread in here. I don't like the idea of a ratio. It does reduce the cost a little bit. About 2/3 of the cost is absorbed by selling these out of the money 55s, but even just a straight up vertical in-out spread, the vol skew is favorable to buy over here and sell out there because the vol's lower and higher. It reduces the net debit, and again, is directional. So again, you could keep it very much in out, like a 58.50, 56.50, and there's a little bit of an edge there because of the volatility, the vol skew favoring doing a long put vertical. But again, we're looking at 55. Where's 55 here? It's about right there. So back to prior highs. So the idea is, could we see some downside pressure to 55? That's what that spread or that trade that happened today is indicating. And again, it dovetails with what's going on in terms of communications earnings. Now, as we look at earnings overall, companies like JP Morgan had a phenomenal quarter, and the stock was rewarded for it. The stock went up dramatically. Its earnings were up 52% from the prior year. Revenue is up 24%. Bank of America's earnings, BAC, was up over 15.5%. Although cities did not necessarily prove to be all that positive. We did get the move here. We got the pullback. Their earnings declined 8.1%. You look at other regional banks like a U.S. Bank, for example. This stock, saw the earnings and we've broken down since. But the earnings weren't necessarily tremendously unfavorable. But the pressure on traditional lending institution is rather significant. And so, again, expect that to be a reality that any rallies we see does help create some downside opportunity. Now, I'm not suggesting it's a great trade. This is not very liquid, but if we look at RILY, this is B. Riley Financial. This has had a really nice run. And so, these create opportunities to start to turn an eye to the more bearish side of it. It's just the liquidity isn't there isn't as promising for something like Riley, but it does help you look around for financial stocks that might experience some weakness. But in this one in Riley, it was a 27.50.20 for June. So we're looking out there a little ways. Now, so again, we have earnings trends flipping towards communications, but look at what led today. It was energy, right? Catching a nice little bid. We had the gap back here. We tested the prior low. We're bouncing off it today. Is $93 in view. Materials up 0.5% today. But again, more option activity in GLD and GDX. Looking down the road a little bit, are we a little oversold in the near term? Yes. Could we retest prior highs? Is kind of what we're looking for. We'll look at option activity there. But on the energy front, what is the positives for energy? Well, if we look at forward/CL, CL is coming off its lows the last couple of days, but a better perspective is looking at the curve, right? The futures. And what you're seeing right now is the futures curve is in backwardation with falling prices out here. That means these are going to converge back up to the spot, creating more bullish pressure on energy. And of course, if energy holds, energy stocks should do relatively well, as they've seen a little more of a pullback over the last little week. So XLE was up nicely today. Bullish trade in XOP. So again, on the scan, I can turn this to all ETFs. I'm sorry, I'm here category. Sorry, no. Public right here. All ETFs, and you can scan, right? And you can bring up, and there's a mix of various volume and open interest. And you can kind of see what's in here, TLT, XOP in there as well, some KWeb. But the idea is we're catching a bid today in XOP. Volume was not significant. Kind of expect this to maybe have a chance of retesting the prior high at 135. And as we look at the trade today in XOP, this was a weekly expiration, 28, April. We're looking at about 3,700 contracts, mostly bought at the 130 strike. So not super far out of the money, but it does create kind of a level. Can it create a little bit of gamma that if we start to break through it, where, option makers may have to cover, through hedging, through buying stock. And again, this is a pretty big ETF that's probably more limited, but it is a reflection of some sentiment coming in, finishing near the high. They would have loved to have seen a little more volume, but volume on ETFs is not as significant. But we're just looking at a short-term squeeze higher to about 135, and that could be accomplished from a trading standpoint. Going out here a little bit, 25 days. Could you look at an in-out spread, buying a 129, selling a 130? The vol skew is against you a little bit here, but on that one, you're looking at about 55 cents. The pricing's not great for a spread. You could look at some individual stocks that are higher weighting within XOP. You could buy stock, for example, but again, looking at a kind of a near-term move back to prior highs. So we get the option activity plus the backwardation oil. That does suggest the upside risk right now for oil generally, the commodity, is to the upside. And as oil rises, well, what happens to refining companies? So again, if you look at refining margins, this isn't a perfect reflection of that, but it's a way to do it on a chart. I can take RBOB gasoline against oil. Oil's performed a lot better than gasoline. So you might also look for, is there the possibility that gasoline prices begin to pop again? The lower potential demand out there may suggest we have more downside, and oil should outperform and margins for VLO should get squeezed. But watch this ratio. We start to break out. It might create another run, kind of like we saw, for example, end of February for refiners to maybe outperform energy generally. Valero, for example, is one of those. You kind of see the end of February timeframe where you kind of saw the run, but then broke down. MPC is another one. It got a nice bid today, held up relatively better. PSX as well. So again, there's a number of these stocks you can look for, watching for that ratio to break, and then look for a retest of prior highs. As we turn our attention back to materials, materials are kind of consolidating right now. Second best performer on the day start to break through the highs of like 81.70, we might have a chance of running back to 84.75. Companies like FCX were fairly strong back here. This is one I highlighted. We kind of hit our target area and we began to break down again, and earnings did not exactly help it. So as we look at gold prices has remained fairly resilient. Silver prices to a lesser degree, but again, similar position given its 1 year range. But what we have right now is a debt ceiling that could get really ugly, and it may occur more quickly than we might otherwise think. And what does this mean for the dollar if we raise the debt ceiling and increase spending and the Fed starts to backtrack? There's a lot of situations here that could be very, very positive for gold. I'm still expecting to see more pressure in the market, a stronger dollar in the near term, which may cause this to drive down further. But again, there are the risks that we don't experience that we quickly go back to the inflationist policy that only exacerbates the weakness of the dollar and, of the abandoning of the dollar as a reserve currency, the unwillingness to lend us money, et cetera. That may, again, so a lot of stuff coordinating with that. Well, with GLD today, you saw traders step in trying to take advantage of the weaker price, the pullback. We look at option statistics here, pretty balanced on the call side, but almost over two times the average in volume today. You look at option time and sales, and let me just clear all the filters out here. What you'll see is a 195, 210, 60, almost 67,000 contracts for June. Again, coinciding with that debt ceiling discussion. Again, the upside here is reflected. Sorry, we don't have to look at it. I guess we have it right there. But the idea is there's a willingness to want to take a stab to the upside. We've seen other trades like this for June, August, December, January, etc. This is just another one that's layering over the top that suggests what? 185, and the upside of the top side short is at 210, I believe. That's all the way up here. If I take this initial seed wave, that's our 261% projection. Didn't think it would get there, but in the coming months, again, a lot of stuff can happen if we err towards the inflation side of it, printing money, monetizing debt, helping JP Morgan increase their earnings by even more. Okay, we may yet see that, and we saw it also GDX today. So again, not a huge day for GDX or GLD, but again, this is more emblematic of some near-term oversold and the possibility we could see it really turn around here. If we look at 12 May on this one, out here on the call side, 2,700 contracts, not as big as the gold side of it, but this is shorter term, right? Looking at a near-term rally in GDX. And again, the strike on that one is 38 up here, but a retest at 36 is a reasonable short-term expectation. And the vol does get a little more favorable. You start to get further out of the money here, buying a lower strike, selling a higher strike. But even here, it's flattish. You could probably create a favorable long call vertical in here at a lower price, like a 35, 36, just looking for a near-term bounce to 36. It seems like a pretty reasonable setup here. So again, I mean, as we look at gold and oil, I mean, this is showing some near-term strength. But as we contrast that with the broader market, EFA, so we're talking about kind of a global ETF by BlackRock here. This is one where it's a bit overbought right now. It's different from gold, for example, and oil that's more oversold in the near term. This was higher today by 0.25%. You could look for maybe a turnaround, but this does create a pretty decent opportunity to start to look for downside opportunity as maybe what the volatility gauge are representing may bear some fruit. And you look at it here in May, for example, this is a $70 strike price in here. This is mostly bought a little higher than the open interest, but it certainly looks like this is a long activity at the 70 strike. And you look down here, 70. This creates an opportunity to start to look at the possibility. Maybe it's in and out spread. 25 days, you go out 53 days, even 32 days. Liquidity is, okay in here on this expiration, but, like a 75, 73, you'll see that cost you less than $1. So again, better than a 50-50, slightly better. All you need this is to be below 73 a little bit. You could close that out for 30% in the next 3 days or 55% at some point in the next 32 days as a signal to close it. But anyway, just a thought there for the broader market. And we look at the Qs. This is more technology heavy. So weakness in XLK as a result of those top performer major contributors to the S&P 500 performance this year. Again, a lot of those same names like a Microsoft is heavily weighted here in technology. Microsoft nearly breaking support today, holding on. Apple's another one. Again, a big part of technology in the Qs. Google announcing this week. We saw a bearish trade there. So a potential right now for the Qs to start to maybe poised to see a bit of a break of support, maybe a pullback towards 300, possibly maybe 305. But as we look at this, and again, you see if we're looking at the triple leverage SQQQ, again, this is something that would pull up on an ETF scan. Again, I have some variations up here that I do, but if we look at, I believe it's on this one, SQQQ popping up right here. So you can kind of see where the activity is. Now, again, I wouldn't necessarily tell someone that SQQ is a great investment or to buy it or to trade options on it. But again, this is representative of money flow into SQQQ. And we can see here on the 28 April expiration here on the call side, because this is an ultra pro short, right? We're looking at inverse relationship. That's the 31 strike there. So not much out of the money. But again, it's indicative of some bearish flows coming in on a week where we may be poised to see reversal in technology and some of these communications names all have weight on specifically the Qs. We'll kind of wrap it up here with a couple of others. The bond market, TLT. TLT is at support right now. Near-term upside looks like we may have a chance to go into 108 as this is a significant level of support. And of course, as we are seeing this support, we're also seeing some option activity on TLT. And I may have forgot to write down. Go through it here. Let's go look at it. So go to the trade tab. Forgot to write on TLT, but I didn't go over my session earlier. That's probably why. So we look at the option activity. The call side is sizzling 68% above average. Let's see if there's any significant trade. And you'll see in here the 26th May, 101, 108, 101, 111. Those are different times here. So we have the call. What is that, a put on that one? So it looks like we're selling a put and buying a 108, 111 call spread on this one here. You also see some other spreads here, 101.50 put, 108 call. Again, kind of, contributing to that on that one. And you'll see another one here, 111 call. So point being is we have a short put to buy a call spread, 108, 111. And we look at 111, it's a bit up here. 108 is about where the prior highs are. So again, this isn't a terrible setup to go long TLT in the near term. If the market does pull back, there may be a little bit of reflexivity kind of going into a play where, yields, maybe the Fed's not going to raise rates. They're going to stall on May 3rd. Lots of stuff playing out here that could benefit TLT. Some solid auctions recently. Even the debt ceiling is not much of a concern because if we're talking about default, you expect short-term treasuries like IRX to sell off and see yield spike here and prices go down, not in that 20-year to 30-year time frame. So TLT looks interesting here. Coming off support, 111 is that trade 108, 111 for that start of May expiration. Anyway, kind of interesting setup there. And if we set up positively for treasuries, what does that mean for something like junk bonds, right? Interest rate sensitive product, but if the perception of risk begins to expand, what happens? The prices, you generally see prices fall for HYG, prices go up for TLT, and we see what's called the risk spread expand. And today in HYG, it was a May expiration here. So we'll look at the kind of the May time frame. You'll see in here a 74.50 right here, 10,000 contracts and 72. There's a lot more kind of building in there. Let's go down and look at the time and sales. But we're going to kind of zero in on the May on the put side. But anyway, you can kind of see the 74, 72 right there, 10,000 contracts. So anyway, I guess I wrote down the wrong one, but 74.50 is also in there too, but 74.72 as a spread. There's other spreads in there, but the idea is that can we retest our lows in the coming weeks? Yes, right? Could we get back to 73? Well, if we look at kind of the consolidation that we're presently in HYG, this looks like kind of like a symmetrical triangle. You could flip it around and say, well, yeah, but I had a nice wave right here. Volume wasn't dramatic. This could be a pennant, but we'll watch for the breakout. The range is from 74 to about 75 and a half, about a point and a half on the break of 74 and a half. That gets you down to 73. So 73 in view as a target for HYG. And again, the great thing about vol skew is that when you play the downside, these opportunities are always priced reasonably well. So the idea is you could buy a higher strike price at 76 and sell a lower strike price at 75. The vol skew, that's not super favorable on that one. 75 and a half, 74 and a half, slightly favorable, but pretty balanced in here, and it gets a little better as you extend to the downside for HYG. But again, we're looking at 73 being a short-term target. 71, if we break 73, would open up at that point, as this is historically a significant level of support. We'll wrap things up today with a look at Zoom, talking about oversold stocks. This is certainly oversold in the near term. We did not close below the low from 1227. We came close. We closed below the low from March 10th. But today, what you're seeing is a very rangy candle. Would have loved to have seen it close near the high of the session. Extraordinary volume. So what we see right now is a strong tug of war between buyers and sellers, and we're just waiting for a resolution. You can look for a trade through today's high as a trigger, looking for about 74 in the near term. Of course, the trade today was a little bit closer to the vest. That may help create the scenario, the breakout scenario there. But this is a 28 April, centered around the 65 strike down here. Again, we saw some other stuff filtering in through at higher strikes as well. And we can look at today's option statistics. Pretty balanced here, most of it occurring between the market. We are seeing a lot of activity coming in, both on the call and the put side. All the more reason to see some sort of confirmation. And I look at today's high breaking through as to help kind of create that scenario, setting up to test 74 in the near term. But the volume, the range today really drew the attention and some of the activity on it. Well, folks, wrap it up there for today's video. We'll catch you back next Monday.